everyone. Switching back to that July employment situation, the weaker than expected jobs report furthering signs of a slowdown in the labor market. Yahoo Finance's Jennifer Schonberger standing by with a very special guest, Acting Labor Secretary Julie Su. Jennifer, take it away.
Thanks so much, Brad. Secretary Su, thank you so much for joining me. It's always great to see you here on Jobs Day. Much weaker than expected jobs report this morning. Does this forebode for a sharper downturn in the job market in store to come?
Well, we're going to keep an eye on it, but I don't think so. And part of the reason for that is that, again, we look at not just 1 month, but trends. And the 3-month average of jobs created is still 170,000. That is continued strong economic growth and jobs growth. And other indicators are also strong. They do not indicate a recession. They are, we have very high GDP. We have low levels of layoffs overall. Labor force participation rate remains high. We set a new record when it comes to prime age workers, both men and women combined. And so, this is a cooler than expected number. It's taking people longer to find jobs, but they're remaining in the market and looking for them. And we continue to have investments that are going to keep on going out into communities to fix roads and bridges and expand access to internet and build fabs that will allow us to manufacture things here at home again. And so those are all some of the the things we look forward to that will affect the numbers as we go forward.
The unemployment rate bumping up to 4.3% and triggering what is called the Sahm Rule, a labor market indicator, which has historically accurately predicted recessions. What is this jobs report telling you about the economy right now?
I think so much about what has happened since President Biden came into office and since the recovery from the pandemic has defied expectations, right? And so the Sahm Rule itself really has not been applied in a situation where you had such a low level of unemployment, especially for such a long stretch as we've had. I've come here many times to say we have this, lowest levels of unemployment for the longest stretch since Neil Armstrong stepped on the moon, right? There's just been a lot of indicators of a low levels of unemployment for a long time. So yes, this was an increase this month. There was also high levels of labor force participation rate still. And so I think there's still a question, the jury's out as to whether the Sahm Rule and what it has indicated historically would apply in this situation.
If the job market were to slow further, like you said, this is 1 month, what actions would the Biden administration take?
Well, look, we, again, don't make too much out of any 1 month, but we are committed and remain committed to creating jobs, and not just numbers of jobs, but good jobs. And that's why, we've seen real wages grow. And that's true, again, even in this month's report. Real wages, meaning wages are higher than the rate of inflation, more money in working families' pockets. I travel the country and meet with workers who have a union contract for the first time, who are experiencing double-digit wage increases, who have a real voice on the job. The quality of the jobs that matter to us have mattered from day one for this president and our vice president. And so we'll continue the work that we've been doing. We'll continue to make investments that create good jobs. We'll continue to support, workers getting their fair share. We'll continue to combat the massive gap between CEO pay and frontline worker pay, where a CEO makes in a year more than a worker can make in their entire lifetime. These are long-time trends in the economy that we've been working to reverse. They don't reverse overnight, but we've made significant progress, and that's the work that we will continue to do.
On wage growth, we saw that clock in at 3.6%, down from 3.9% the prior month. What's that telling you about inflation?
Well, the work against inflation remains, right? The president has said he's laser focused on it because of actions that he's taken, because of calls he's made to corporations. I mean, again, we see corporate CEOs increase their salaries at record levels. And so inflation is not an inevitable factor, right? This is something that there's choices that are being made, and we believe that a more equitable economy is not only better for working people, it's a stronger economy, right? Having more equity encourages encourages more growth. So we'll keep fighting for that equity. But we have made real progress in that, and the wages that working people are feeling, the new union contracts. I was just in Fort Valley, Georgia, celebrating with workers who work at Bluebird, their new union contract, and the employer is also saying this is a good thing for us. So we believe that a vision in which employers and employees win through strong collective bargaining is the vision of the economy that we want.
Really quick, the labor force participation rate ticked up very slightly. I'm wondering how much of the cooling in the job market that we saw, the rises in unemployment in certain areas, are attributed to more people trying to join the workforce and look for work versus lower employment.
Right. So labor force participation is another indicator of economic strength. And this last month, we had the highest labor force participation rate in decades for both men and women of prime age. So this is, again, the fact that there are workers who are staying in, right? They're not leaving. They're taking longer to find jobs, but they're staying in the labor market is certainly related to the unemployment rate that we see.
Secretary Sue, we'll have to leave the conversation there. Still so many questions to be had, though, so appreciate your time.
Thank you so much. Thank you.
Shauna, I'll send it back to you in New York.